We got Brenda Chen here. She is the managing director of Convectus Lending here in San Francisco. They funded over $7.7 billion nationwide since their starting. She's also the founder of the SF Real Estate Club and the founder of Venus Ventures. How much do you think you have closed just yourself?
Probably over 1.5 billion if I were to guess.
So what would be your advice to someone who wants to start a real estate meetup or meetup in general?
Yeah, it can be scary, but the payoff is like 1,000 times. I really cared about the depth of the conversation. So in the beginning, I was just in hustle mode and learning a lot about real estate, and also it helped a lot with sales. And so I was closing like one deal per event, which is why I did 4 events per month.
Are there any other markets? I know you guys are like 40 states, you said. Any other markets that you see a lot of great activity or success with other investors?
I'd say
All right, guys, welcome back to The Lowdown. I'm your host, Lorenzo Mercado, and today I'm very excited because we got Brenda Chen here. She is the managing director of Convectus Lending here in San Francisco. They funded over $7.7 billion nationwide since their starting. She's also the founder of the SF Real Estate Club and the founder of Venus Ventures in San Francisco. So Brenda, welcome to the show.
Hi everyone, thanks Lorenzo for having me. Super excited to be here.
Yeah, of course, it's an honor. So before we get started and everything, what made you get into the lending space?
So I was actually pre-med in college, and I was exploring that, and I realized that it wasn't really for me. It wasn't super aligned. So I was kind of exploring, and I was thinking, I wanted to get financial freedom. I wanted to build wealth. And I first got into sales. And then from there, I found real estate. So I joined Conventus in 2017, so over 7 years ago. And it's super niche because it's for real estate investors. And so I think that was super perfect because I got to learn all about real estate investing and all the people in it. And I was super excited to learn about, what they did to add value to their communities. And so it was just a perfect fit from there. So that's why I stayed for so long.
Nice. Okay.
Yeah.
So you said Convectus was your very first sales thing, or was there another sales one before that?
So I went through a sales boot camp. I was thinking of going to tech sales. So I was interviewing at different places, thinking of, joining potentially like bigger, tech companies. But yeah, I got recruited pretty early on and decided, okay, like this is what I'm really interested in, and get to see the projects come to life and get to work with clients directly. And so I really like that part.
That's awesome. Pre-med into sales is obviously very different things. How was it going from pre-med to sales? I mean, they're obviously very different, I guess, backgrounds and like things that you're learning in school. Was it an easy transition for you, or did you always kind of have that sales kind of ability?
Actually, I always, when I was little, I always wanted to have parties with my friends. Like that was my thing because I was pretty sheltered growing up. I was like definitely a nerd, but I always had that like in mind. And so I really like the people aspect of it. I love connecting with people, especially one-on-one, because I would say I'm more of an introvert. I'm probably like in the middle, an ambivert, but I just love connecting with people. But yeah, it was definitely hard to pivot because, with pre-med, it's a very set path. Like you already know what you're going to do for the next 5 to 10 years. So it was definitely scary, but I knew that it wasn't for me. So at that point, I was just willing to try other things. Like I was super interested in marketing as well, just business and entrepreneurship in general, because I wanted, my number one thing back then and now is freedom. And so I just wanted to achieve that. And I knew that sales was going to be a big part of it, even if I didn't go into it as a career. So I just wanted to learn about it at that point. But I actually, after many years, I actually really do enjoy it. I love bringing people together, like telling them about different resources out there, and just, making lasting relationships.
It's awesome. Yeah, pre-med is definitely no joke. I mean, I'm a nurse, and so I work in the hospital, and I see all the extensive training that people go through. I mean, you do four years pre-med, right? Then you go med school, that's 4 years, and you do 6 to 7 years of residency, and then you do a fellowship. So by the time you're actually making money, you're in your mid-30s, and so that's one of the best things about sales. There's no, obviously, ceiling to how much you can make, which is awesome also. And I think that's just one of the biggest benefits of it. And I think when you're in medicine, by the time you actually start making money, obviously you're in your mid-30s. So I think you'd be a lot farther behind than a lot of the people who start doing things earlier.
I feel like medicine is a really great path for people who are super into science and I think there are some doctors where it's definitely their calling, but I felt like I was trying to force myself into that. Like I was never reading science books on the side. I was always business and mindset and like philosophy and all of that. So I think it's a great fit for someone, who might not be like counting all the years, but for me I was counting every minute. So yeah, I'm just really grateful I got to pivot away from it because that wasn't my path. And yeah, I'm so super respectful of all the doctors out there. I think they're amazing. And it's really hard. I worked at a hospital before, and I'm super grateful for all of the work they do. But yeah, I'm really, really grateful that I found a path that I'm passionate about genuinely.
So now you're directing manager at Connectus, right? Did you start there, or did you start as like an intern, or what was it like for you to climb up to the managing director?
Yeah, so I started in 2017, and back then the company was started in 2015 by Keith Tomeo, and so I was the first loan officer. And back then, it was super small. I think I was hire number 7, like employee number 7, and so I got to see a lot of different sides of the business. So I saw, before the credit team wasn't as built out, so we got to do a lot of the underwriting as well, which is not typical of sales. But I really, I'm grateful I got to see a lot of different aspects of it. And so yeah, in the beginning, I was just happy to learn. And so I would go out to a bunch of meetups. And from there, I got super inspired. So I was super motivated. I would go out like multiple times per week after work and on the weekends, because I wanted to learn as much as I could about real estate. And because of that, I built a lot of relationships really quickly. And then I started to host my own real estate club, like you mentioned, the SIB Real Estate Club in 2018. And so by hosting these events, I got to network with a lot of speakers. And yeah, so it's really just being a part of the ecosystem and trying to provide value. And so yeah, from there, I just it really grew really fast. And yeah, now I'm here.
One thing I love, like you said, is from early on, you start developing relationships. And in real estate, as you know, relationships is everything in this game. And I think people, it's not important to just do like transactional stuff. I think it's really important to just try and build long-term relationships with people, because that's how I want to be also, just doing things with people, partners with people long-term, and do many things with them. And I think that doing the meetups like you're doing is very, very huge. And I think that's something that not a lot of people were doing. And so I think that's very important.
Yeah, I think over time you saw, some groups were active and then became inactive. So for me, I just wanted to make it consistent. So even if some of the events were smaller, like would have coffee events with like 5 people, but I really cared about the depth of the conversation. So in the beginning, I would just, in hustle mode and wanted to meet as many people as possible. I just wanted to give everyone my business cards. But I realized over time that it's about the conversations. It's not about the name if you don't know anything behind it. So I made it a point to do more one-on-ones as well, and just to see, what's their story and what's their story outside of real estate too, and how can I help them in general. So yeah, I think being consistent definitely was more rough during COVID. A lot of the events were virtual, and then people moved and things like that. But I still want to be super consistent. And now I'm more into partnering with other people because we all have similar goals, especially other meetup leaders. Like we're definitely stronger together. So hosting bigger events, putting more resources together to host events that are going to be super valuable for the attendees. I think that's going to be the evolution next.
So what would be your advice to someone who wants to start a real estate meetup, or meetup in general, but maybe feels kind of like an introvert or stuff like that? What would be your advice to someone who wants to start one?
I would say, yeah, it can be scary, but the payoff is like 1,000 times, it's just, yeah, I think it's going to get people out of their comfort zones. And it's really a way for you to meet people that you wouldn't normally meet, and a way to fast track that as well. And so I would say focus on your end goal, your why of, why you're doing it. And so, I think co-hosting with someone is a great way. Like I'm happy to help beginners to co-host their first meetup. Just having someone, I think some of the events we only had a couple people, but by knowing I'm gonna have a co-host there, I knew it was gonna be an awesome time. So, even if it ends up just being you and your co-host, like that's still a great way to build a relationship with that person. So, finding at least one person to be on your team and do it together, I think it's a great way to start. And also just have very minimal standards for yourself at first, because by doing your first one, you're gonna get traction to do more of them. So, your first meetup, it could just be a dinner with 6 people or something. Just have like a very low bar, and then by hitting that, you'll get a win, and then you'll be able to host more consistently.
Nice. What's been some of the biggest benefits that you've seen directly or indirectly from hosting like big meetups?
Yeah, so definitely networking with the speakers and learning a lot about real estate. And also, it helped a lot with sales. And so I was closing like one deal per event, which is why I did 4 events per month before COVID. But yeah, I was really driven by that as well. But also, just like the little things like being able to connect with people and learn about their stories, feel a part of the community, and really see what's out there, because we're all in different niches of real estate, and it's cool to see be out of your own bubble and see what's out there to see if that piques your interest. So I think I started in my 20s, and I got to see the breadth of real estate, and so from there I was able to hone in more on like what is my niche, what are my strengths, and what do I want to go all in on.
Yeah, I love that you're able to see all those benefits. I think one of the biggest benefits for me for going to these kind of events, networking with other people, is in my own immediate sphere of influence. I often feel very alone because a lot of my friends and family, a lot of my coworkers, none of them are doing any kind of real estate stuff or kind of have that mindset. A lot of them are just very happy for doing, which is not a bad thing, but I'm not. And so I think it's nice to just connect with other people because I often feel very lonely, entrepreneurship in general. And so I think it's nice to be able to connect with other people, like you said.
Yeah, definitely. And what I found was that real estate people are so open, people like you, and they're so driven. And, sometimes they're doing multiple things at once, but they do them all, well. And they really want to give back. And I could feel, when I was starting, there are a lot of mentors that, they didn't have to help me, but they went out of their way to do it. And so by putting yourself out there, even if you're not hosting your first event, by just putting yourself out there and going to other people's events, you can really meet someone who could really help you or that you can help. And so yeah, I would say, even if you don't want to host your first event, it might be good to like volunteer at other people's events just to see how they do it. I'm always learning from other people. Yeah, everyone's so creative. And so just being a part of that community and being active is super great.
Yeah. Have you ever read the book, The Power of One More? But
No, I haven't.
really
No.
good book. The premise of the book is you're one blank away from changing your life. And so
Wow.
one thing that I really took away from it is you're one relationship or one handshake away from changing your life. And so I think if you're afraid to go to these networking events, you never know, because the person you meet there could be a potential business partner, could be a lifelong investor, whatever it may be. But yeah, that's just the premise of the book, is just like be one blank away from changing your life.
Wow. I love that. I'm going to put that on my list.
Going back to convectus lending, you said there's been over 7.7 billion since it started. How much do you think you have closed just yourself since you joined?
Probably over 1.5 billion if I were to guess.
Damn.
Yeah. So I did around 420 million last year. I'm aiming for 1 billion in a year. Yeah, but I'm also building a team, so it's super important for me to empower everyone to build their books as well. And we're all in different markets, and that's really great. But yeah, I really enjoy this process and want to build a team who are also gonna get a lot of value from this.
Yeah. What do you think has been some of the biggest or most effective things that have helped you kind of build a team? Because right now I'm at the stage where I'm solopreneur, doing everything myself. And I've been learning that it's important to hire the right people to do the things that maybe you suck at and maybe they're really good at. And so what have been the best things for you to like help your team?
Ooh, it's a great question. So I would say being able to recognize someone who's going to be really hungry is the number one thing, because everything can be taught. But, I always ask people in interviews, like, what drives you? And if it's a big enough drive, like they're going to work super hard. You're not going to have to micromanage them, and they're going to learn everything they can on their own. So I think if they have a big enough why, then it's going to power them through. But if they don't, if they have if they have a more complacent goal, then it might not be a good fit. So I would say someone who dreams really big, someone who's super ambitious. You will have to do a lot more to keep them hungry and make sure they're elevated, because you don't want them to be bored. But yeah, someone who's going to keep pushing you to give them more to do and to elevate yourself so that you can be a leader for them.
I love that. Yeah, I think it's definitely very important to, in order to have success yourself, try and build success in a lot of other people and elevate them as well, like you said. So that definitely seems very important. So what kind of loan products do you guys offer at Convectus?
So we do a lot of bridge loans, and for that we do purchase, refinances, rate term refi, cash out refi. We do construction loans, ground up loans. We've done some land loans, mixed use commercial. So we're pretty flexible in what we can do, but the majority of our loans are bridge loans for fix and flips, and some sort of value add. And we also do a lot of single family, multifamily, and then we also have a Dear Sierra product that's a longer term holds. And we're in 40. We're active nationwide, so we're in around 44 states right now.
Nice. And so none of this is just like for your regular residential family wants to do. This is all for investors.
Yeah, it's for business purpose. Yeah.
Okay. And so what do you think separates Convectus from other lenders? Because there's other lenders, like the first one who I've used for my first couple of flips is Kiavi. I've heard of other ones like Iron Bridge Lending and Washington.
Mm-hmm.
What makes Convectus different?
Yeah, I love that question. So we're very personalized for the investor and what they're trying to do, and we're super responsive. And so you're able to get a quote that's personalized to your project within one business day. And not only that, we're super competitive on the rates and the terms, because we know that developers are trying to save as much cost as possible. And a lot of us on the sales side, we've been on the development and investing side. So we know what it's like to be an investor. You want to try to save every dollar, and manage your risks on all of that. So we just want to be a great partner for them, and we want to develop a long-term relationship. And it makes us super happy to see clients succeed. A lot of our clients have made a lot of, returns on their investments, and they keep coming back, and they're repeat clients. So I would say being an easy partner for them to work with, and then also providing really transparent and competitive pricing as well. We can do loans with no points as well, which is pretty interesting in that space. And we can do things that are more flexible, like maybe we'll get a drive-by report if someone is in a rush, or do little things like extending their loan term. So yeah, it doesn't take us that long to even just change a loan from 12 months to like 24 months, etc. So yeah, we know all the tweaks that we can do to make it work for them. And we just really try to understand their project deeply to have a solution that really works for that project, because everyone's properties are so different, and what they're trying to do is so different. So being able to be flexible on different things is super important for a lender to do.
So many things I love that you said. You're very personable. You're very every client is personalized, and so that you said you cater to that, and you're excellent communication. I think those are all very, very important aspects. And guys, as you know, having a great lender is probably one of the most essential, if not the most important person to be on your real estate investing team, because without a solid lender, you will not be able to buy any of these deals. And so it's very important to find a good lender like Brenda or Convectus to work with you. And so what would you say is just like the average right now? I know rates are different every day, but like for a regular $1 million home, like what would you say the rates are and points and all that stuff?
Yeah, so we try to be super competitive, and it depends on experience. I would say that's the number one driver: experience and credit score, and also the size of the renovation. So like a cosmetic rehab is going to be very different from a structural or ground up. But our rates start at roughly like 8% plus, and 0 points. That's like the minimum. So you have to be like super tier one and all of that to get that. But yeah, it goes up from there, and depending on different aspects, like multifamily is going to be priced up higher than single family, and the more units, the higher it gets. And then the size of the rehab is going to matter as well as your experience. And I would say to get the best pricing from your lender, definitely showcase the projects you've done in the past, because that is what's going to get them the most comfortable if you've already done a similar project. And yeah, just developing a relationship with them, like try to refer them clients, and it's we do try to provide as much value as possible to our clients, and that matters a lot to us. So being able to be the best in pricing is super important for us. Like we're talking constantly about like how do we decrease our cost of capital so we can pass on to our clients, because we know that they, especially the experienced borrowers, like they have a lot of choices, and you want to be the best in pricing and you want to be the best in service in order to keep them long term.
Do you think there's a specific number of flips that you have to do in order to get those lower ones? Is it like 3 to 5 flips? Is it not based on a specific number? Is it just on like how well the flips do? Like what would you say is the experience you needed to get like the best points?
I would say if you can do at least 10 in the last 3 years, then you can get the best tier pricing. And then they do care about like kind. So as long as the project you're trying to do is similar to what you've done in the past, then that should be easy. But even if not, definitely we always have a conversation with our clients, and we'll do like a write up of like why we think that they're able to do this deal, like who's working on it with them. Like it's super detailed. So we're definitely their champions, and we try to get them the best pricing, even if not, it might not fit traditionally. We'll work with them to see what are some aspects of the loan that another person might not know about, because you don't just want to be a name. You want to have a story, like you want to be able to provide experience and case studies and things like that. And you really want a lender who's going to take the time to like get to know you and get to know what projects you've done, because they could also just very well just tell you, okay, this is the pricing and that's it. Or they could work with you to see, okay, how can we work with our team to get them the best pricing? And that's by having these conversations and understanding what they're trying to do more.
Here, that's good. I love that. Do you guys offer lending to brand new people, again, for higher rates? Because I think that was one thing that I found was a struggle when I was trying to do my first flip. A lot of the people that we spoke to were like, no, you need to have at least one first. And so I was like, well, how do you get first? You're not able to get any lending. And so people were just saying maybe partner with other people who have experience. So what would be some advice you would give to someone who's trying to secure financing for their first one? Would it be to partner with someone else, or just do like a very, very light rehab for your first one?
I think it depends what they're comfortable with. I think there are pros and cons. So if you work with someone who's more experienced, like they want to take a split as well. So you're kind of giving up some of your profit, but that might be worth it if you're able to get lower pricing. So I would model out, what are the cost savings, and for that you would need to know how long is this project going to take. What is your lender going to charge you if you're a new investor versus if you partner with someone? Like what are the differences? And we can definitely provide that pretty easily as well. And then, what is your partner going to take? Like every partner is different. They might want a higher split or a lower split. So it depends on which partner you end up getting as well.
Okay. Yeah. So for commercial, I know you said that there's higher interest rates for like multifamily. Do you guys also do bridge loans for other assets just in commercial, like hospitality, like hotels or retail or anything like that? Or is it only specific multifamily?
Right now, not as much. Yeah, we do some mixed use, and for mixed use, it's important to know the unit mix, like how much of it is residential versus commercial, and the more residential it is, the lower the pricing. We've done some commercial, like we've done offices before. We'll do commercial, but the LTV is a lot lower, I would say, probably like 50 to 60 versus single family, you can get up to like 90 or 90 plus if you're counting the rehab. But definitely still send things to your lenders, because you never know, and things change all the time. Like the market is constantly changing. So for example, we used to do a lot less new construction. Now we're very active in new construction, and it's only within a couple of months, I would say. So definitely always keep checking with your lenders.
Yeah, right. Yeah, I never know. We don't know. It seems like right now, especially in the commercial space, there's a lot of things like they say is like the '08 crash for a commercial. Like when I'm just driving down the street, I see a lot of commercial buildings being boarded up or being demoed with all these balloon payments that are due with these high interest rates now. Have you guys had to take back any assets, whether it be commercial or residential stuff?
So our default rate is very low. I'm not supposed to share, but we're probably like top one or two in the industry as a whole. And so our goal is, we try to work with clients as much as possible to not have to do that because that's not our business. Our business is in lending, and we want them to be super successful. So they do multiple projects. So I would say we work a lot more with our clients to make sure that we don't have to take these back if possible. So we provide them creative solutions to not have to do that. But yeah, I mean, it's a part of the game to have to take over assets if they don't pay over a long period of time. But I would say we do a lot to make sure we don't have to do that. Yeah.
That's good. What's the extension process like? Say I have like a 12-month instruction part of my loan. I want to extend, maybe for whatever reason.
Uh-huh.
What's that process like, you guys?
That's a great question. So I would say even before you get to that point, when you're starting a loan, ask about, a longer term if that's what you think you're going to need, because it's much easier to structure, an 18-month or 24-month when you're doing the loan versus trying to get an extension afterwards. Yeah, so I would say that's number one. Number two, after that, if you're close to maturity, definitely reach out to your lender. I would say like 3 months before your maturity, if possible. And that way they can give you an idea of, okay, what is the pricing going to be like when you need to extend? And then that way you have that in mind. And I would say they're able to give you options within 1 month of your maturity. And then I think getting options to refinance as well. So we can refinance our loans with no points as well. And so that way you can compare, like, is it cheaper for me to refinance this for no points or extend it? And so sometimes the extensions is with a servicer, and so that fee goes to them. And we're trying to service more of our loans so that you could decrease those costs to the clients. But yeah, that way you could have both options, like what is it to refinance and what is it to get like a 3-month extension, etc.
Yeah, I've never had to do any kind of refinancing yet. On my very first flip, everything that could have gone wrong went wrong.
Oh, wow.
And so like our hard money loan was due. All of our credit cards over 0% were due. And it was like we either take a loss or we try and extend it, and we have to go through probate, and then we have to worry about extending the loan, and it's awful. And so the refinancing thing is something I want to learn about. And so if I'm trying to refinance it like Burr or anything like that, do you typically have to rent it out first for like 6 months to 12 months before you can do that? Or like what's that process like for trying to refinance, say, out of a flip that's gone bad?
So it depends whether it's done or not. Do you know? Oh, it was done. Okay, so that way you can get into the DSCR product, and so for that, it depends on the seasoning period, but yeah, you're able to refinance out right away. It's just like the LTV dependent on how much can you get out really, and the longer you hold, the more cash out you're able to get. So 3 months is going to be different from 6 months, going to be different from a year, but similar to the bridge product, like it's always great to have a conversation and see, can they make an exception? Like there might be things that they can do to have a conversation with the credit team to give you an exception. So always ask for that. Even if they tell you something, ask, because of this, like, can you get an exception for me? It's always worth asking.
Okay. It is a DSCR requirement. Is that like 1.2, 1.3?
So our minimum DSCR is 0.8, but the higher the DSCR, as you know, like the higher the lower the rate and the lower the cost. So, but yeah, we can do 0.8.
Okay, love that. Well, guys, Brenda is amazing, and I would definitely look at Convectus Funding if you guys want to use any kind of products. Highly recommend. So thank you for sharing all that.
Yeah, thank you so much for having me.
The thing I really want to know about now is Venus Ventures. What inspired Venus Ventures? How'd you come up with the name? And yeah.
Yeah, so I started that in 2020, and I always was interested in investing. So I actually started with a few angel investments in tech, and then I was evaluating a lot of flips. So my mentor is Elisa Covington, and so I saw a lot of her YouTube videos, and I really wanted to get in the game. And so back in 2020, I started to wholesale a few properties, and so now I'm really interested in development. So working on flips, doing some passive investments as well in hospitality, and then also doing long-term rentals in the future. But right now, I'm super interested in the single family space, especially in the Bay Area. I think it's doing quite well. So, now that I evaluate a lot of different strategies, for me personally, I really like flips and in the Bay Area. So I think that's going to be my niche for that.
So your very first deal is a wholesale deal.
Yeah.
Okay. What was that first deal like? 'Cause the first deal is always the hardest. So walk us through your first deal.
Yeah, so I actually got it from an agent. And so during COVID, people were not as active in person. So I would just send out a bunch of emails to agents. And I got that method from Elisa. And so I don't know if it was the best way, but I just would market to agents looking for deals. And yeah, I think the first one was super exciting because it just showed like, oh wow, this actually works. Before it was more of a theory. So yeah, I JV'd with my partners, and so yeah, I was still kind of new back then, so I wanted a partner. So I wanted to JV with people and in wholesale. But yeah, it got me. It took a couple years for me to actually do my own deal where I'm on title and all of that. But the first one, it was just very exciting because it just shows that it works. And it's all about relationships too, because, agents, they're getting bombarded with these marketing, methods all the time. So, how can you make yourself stand out and build that relationship?
Mhm. That's great. Yeah, I think doing a JV is great. I mean, like you said earlier in the interview, even if you take a lower split or a commission or profit or whatever from a deal, I think the learning experiences you get from working with someone can be way more valuable than any credit that you get at the beginning. So especially if you're able to negate any kind of mistakes that could be very costly. And that's the area, it's very expensive. Yeah, I think doing the JV, it's the way to go. That's what I did for my first one. I JV'd with two other people.
Oh, wow.
And yeah, it was nice because it's very hard to do everything yourself.
Hmm.
And so I think I'd much rather have a small piece of pie consistently than have the whole thing by myself and just like lose all my hair because it's so stressful.
Yeah, exactly. Yeah, I would say I took the more conservative approach, and I see myself as very conservative, and so yeah, just getting the first deal done. I didn't really care as much about the split. It was just like I wanted to get something under my belt ASAP, and I wanted to be like highly successful, or have a high probability of success. And so yeah, I think JVing was a great way for my first deal.
So you did a couple wholesales and then you got into flipping. How many flips have you done at this point now?
So I'm working on on my own in San Francisco, so it's going to be my first one. Yeah.
Okay. And how'd you find this deal?
I found it from a wholesaler. Yeah.
It's amazing. How's the experience been so far?
It's been good. I think having the right partners, like you said, is super important. So yeah, I think for that, just vetting their experience, like have they done something similar in the past? And so my partner is very experienced and have done a lot of similar projects in the past. So I'm definitely still a newer investor and flipper, so I definitely am always looking for people who are more experienced than me. But for me, I'm like very interested in deal acquisition and building those relationships. So I think that's what I bring to the table. It's just bringing the deals and the relationships.
Yeah. I mean, in all real estate, whether it be commercial, single family, finding the deal is the hardest part. I think if you can find a good deal, I think the money will come. And so if that's something you really focus
Yeah.
on, I think you'll have a lot of success.
Yeah, exactly. I think that's what's cool about real estate is that anyone can get in. If you can find a deal, super, super experienced investors are willing to partner with you. So I think that's a great way for everyone to get in the door.
Yeah, you don't need, I mean, you need some money to maybe do some marketing, but everyone assumes that you have to have hundreds of thousands of dollars to get started real estate. But like you said, if you just bring a deal, maybe you take a much lower profit or whatever, but still you get that experience and be able to do that and then roll that one, the next one. So the first one's always the hardest.
Yeah, yeah. I think building enough courage to do the first one is super important. And then, yeah, I think being in a community and having people you can come to for advice I think, yeah, having a mentor also is very important because there's so many things that, if you're new, you don't know what you don't know. So definitely have people that you can come to for advice, multiple people too, so you can get many opinions. So I think there are a lot of ways to mitigate your risk as well, and I think just like having the courage to take action is super important.
Yeah, I love that. So being in the lending space, what are your predictions? I know it's hard to say without a crystal ball, but for the next, say, 12 to 24 months for the interest rates, do you think it's going to go lower? You think it's going to go higher?
I think everyone wants to know that.
What are your predictions? If you had to just take a guess.
If I were to take a guess, I would say I do think that the current administration is probably going to want the rates to be lower. It's going to drive a lot of action on the investing side as well. So we're all hoping for that in real estate. But who knows? Like, that would be great for all of us if the rates come down, because I know the higher rates have put a lot of pressure on real estate, especially commercial real estate. I think less so on the single family homes, which is one part of the reason why I'm more interested personally in single family in this area, because it's less dependent on the interest rates. People need to get into these homes, and there are not as many of them. So yeah.
Yeah, definitely. San Francisco is a very competitive market. Prices will always go up no matter what happens with interest rates, just because there's such a shortage of houses. So yeah, it's definitely very important to just focus on areas that I think people always say, if it's really hard to get something, it's a lot easier to sell. And so I think that's
Right.
definitely very important with the Bay Area.
Yeah, definitely.
Are there any other markets? I know you guys are like 40 states, you said.
Mhm.
Any other markets that you see a lot of great activity or success with other investors?
I'd say the single family homes in California have done pretty well, and not only in NorCal but also SoCal. I know they're trying to build a lot after the wildfires in SoCal, so we do want to help as many people as possible down in SoCal to help rebuild. And I would say, yeah, there are deals happening all over. Some markets are better for like rentals, and so we see a lot of that more out of state, where it actually can cash flow instead of, it's a bit tougher to do. You have to be more creative in California. So yeah, I do find that the most experienced investors are forcing the value add. So they're adding units, they're adding square footage, they're doing very creative things. So I see that happening in different places like Florida, like Hawaii, and places like that. I think the commonality is forcing the appreciation, not just looking at the market, but what can you do to add value to the property in terms of like the living square footage and also the units.
Definitely ADU seems like very, very big play
Hmm.
all over the country, but especially here in California where, as you know, there's such a shortage of houses.
Hmm. Exactly.
Yes. So you guys said you guys do new construction or ground up, so you guys do stuff for AUs also?
Yeah. Yeah. A lot of our clients are doing that. So not only will they renovate the existing house, but they'll build an ADU, whether it's detached or attached, and as many of them as possible. And they'll try to find out, what is the max number of units I can build on this parcel.
All right, guys. Well, Brenda, thank you so much for sharing all the information. I know it found a lot of value. I know everyone else will, whether it be with the lending space, hard money loans, getting involved in meetups, and just everything in general. I really appreciate you. So if the listeners want to get a hold of you, what's the best way for them to do so?
Yeah, so my website is brendatchen.com. And so everything's on there, my social media, all of that. But I'm happy to be a resource for everyone, if they want to chat about their deals or financing and things like that. And again, super grateful to be on your show. I love what you're doing.
Thanks, Brenda. Well, everyone, if you guys enjoyed the show, I'll put all the show links in the description for Brenda's links. As always, keep going, keep taking action. We see you guys on the next one. Peace.